Hello, this is Brian Resney, President of Resney Wealth Management. I'm bringing an important update about the economy and the investment market so you can better understand what we see in the global landscape and also how we're currently positioned within our client managed portfolios. You know, the U.S. economy continues to get just a tad better. Emerging markets, of course, are on a tear. Our market trend indicators, our MTI that we publish every week in our newsletter, are all generally speaking in a positive uptrend. Our short-term, intermediate, and long-term trend on the S&P, generally speaking, is on an uptrend, and secondary indicators also. Most of the emerging market economies are also in a very positive. What we're starting to see, of course, roll over, and I've mentioned this many times in the past quarter, is long-term bonds and muni bonds. I firmly believe the two biggest risk assets that investors could possibly be in right now are long-term munis, intermediate munis, and long-term treasuries and intermediate treasuries. These are the two groups, in my opinion, are the most overvalued. And these, of course, are bonds. Investors think bonds are safe and bonds are not safe. Bonds can be just as risky as the stock market, so you have to know when to hold them and you have to know when to fold them. Unfortunately, I think the vast majority of investors loaded up on long-term bonds of all sorts over the last 3 or 4 years, ran out of the equity markets, and I firmly believe that there's going to be a lot of misery for certain investors over the next 3 to 5. Of course, we firmly believe that will not be our clients, as we run a strict strategy on risk and reward, and our global tactical right now is pointing in the top sectors in mid-cap in the U.S., of course Mexico, followed by Russia. We're looking at China and India. So generally speaking, the emerging market economies are really leading on a relative strength on the upside, and we rank our system obviously on an ongoing basis, and we look at all of our market trend indicators in accordance with that. We firmly believe 2013 is going to be a very positive year, but I think it's going to be very positive for sectors that a lot of investors are just simply not in, simply because they don't look and they don't buy what really they don't understand. I think so many investors typically will buy large cap in the U.S. because that's what they hear about all the time, and they miss 99% of all the great investment opportunities across the board. We're getting ready to make a couple adjustments to our global tactical portfolio in the next few days or so, and I firmly believe that investors, the biggest risk assets that investors are going to see the next 3 to 5 years will be long and intermediate term munis and treasury bonds. I think investors are really that have loaded up on this. Of course, these are not Resney Wealth Management clients because we run a strict strategy, but I see a lot of people that are hiring my firm are buying long-term dated all sorts of bonds, especially munis, and they truly don't understand the risks that are involved in these products. I just released our last newsletter a couple days ago. One of the things that I highlight is about FINRA. FINRA is the organization that oversees brokers and broker-dealers, and on FINRA's list on really risk assets that they're looking at that the brokers are all selling and hyping are structured products, which I firmly believe so many investors have bought these. Of course, not our clients because we're not a brokerage firm, we're a money management firm. But a lot of brokers like to sell what people would like to buy, which is yield, and often this yield comes at substantial risk. So structured products were on their hit list, munis were on their hit list, and of course variable annuities, broker-sponsored variable annuities. Those are 3 of the top ones. There's others, but these are ones every day that come into our office we see new potential clients holding these and truly don't understand the risks involved. So if you're not a client, what I would urge you is really take a second look at that portfolio. If you own a lot of large cap, primarily just in the U.S., and you own a lot of long-term bond or bond funds, I think there's areas of substantial risk in your personal portfolio. One of the big things for all of our clients at Resney Wealth Management that we believe in is risk management. We want to avoid major catastrophic losses in a recession, and the way that our portfolio is set up in our management strategy is there to alleviate major downdrafts. These 2 to 3 or 4 to 5% movements are going to happen on a regular basis. I'm talking about these 20, 30, 40% moves in a recessionary environment. Right now, all of our indicators on the recessionary front are all positive, meaning we're not seeing any negatives towards a recession anytime in at least the next 6 months. Of course, we rank these on an ongoing basis, but right now, the U.S. economy, and more importantly, the emerging market economies, are far in excess some of the best places to be invested in our opinion, and they are ranked the highest in our global tactical portfolio. Of course, if you're a client, I know Jessica at our office has been calling many of our clients looking if you need to set up a review for year end. And of course, if you're not a client, call our office for a consultation. There is a difference. We invite you to experience it. Make sure you listen to our show, our TV show tonight in Southwest Florida. And of course, we will be having another live radio show for 2 hours this coming Sunday. And if you're a client and you have questions, call our office. And if you're not a client, please call our office, make a consultation. There is a difference again, and we invite you to experience it. Have a great and profitable week.